Today's topic we are going to take up profits and gains of business or profession. Format to compute business income of an assessee given here. This is a format to compute business income of an assessee. This is the format. Okay. So in examination, profit and loss account given. In examination, profit and loss given. So you have to take net profit as per P&L. You have to take net profit as per P&L. Okay. Profit is given. Then disallowances. Disallowances if debited. Disallowances. What is disallowances? I will tell one by one. Okay. We will discuss later. What is disallowances? So disallowances if debited. It means if debited in P&L account. Repeat. If debited in P&L account, then you have to add back, which is very simple, ma. See, as far as suppose you are doing business. What is your object? What is your object? To gain more profit, to earn more profit, to earn more profit. But as far as income tax is concerned, you have to show less profit. Listen carefully. Actually, your profit is more, but as far as for the purpose of income tax, you have to pay less tax. That is, you have to show your income, your net profit less. Why? How to show your profit? That is nothing but window dressing, I think so. That is, you have to book your personal expenses. You have to book your personal expenses into the business. What happened? So if you debit all expenses, your all personal expenses, if you debit, what happened? Profit automatically come down. As an assessing officer, I am the assessing officer. Okay, I go through your P&L account. I noticed certain expenses which is not relevant to the business. So any expenditure which is not related to business, if it is debited, then you have to add back. See, we are going to, after I will explain the format, I will go one by one. What are the disallowances? Okay. So disallowances if debited, add back. Next, less incomes consider separately if credited. What is inside? Very simple. See, you are receiving income from house property. You are receiving rent received. So rent received from house property, you are credited to P&L account. Suppose if you are credited to P&L account, so that income from house property is not your business income. So if you credit P&L account, what happened? Your net profit increase. Your net profit increase thereby. So any income, okay, or any other heads of income, if credited to P&L account. So can you tell any other example, sir? Interest received, dividend received. This is pure income from other sources. So income from other sources you are credited to P&L account. So thereby, so if you credited mean what happened? Profit increase. Thereby, if any income which is credited to P&L account, which is not related to the business, then you reduce or less. So less income considered separately if credited. And one more less, depreciation as per income tax. Listen carefully. As far as Companies Act is concerned, depreciation rate is different when compared to depreciation as per income tax. So income tax rate, WD, say in income tax they are following WDV, written down value. But as far as company is concerned, state method, there is a difference. Okay, as far as income tax is concerned, you have to follow only WDV. But other than power sector, in power sector they may claim WDV or SL. But rest of the all other forms are other than power sector. Okay, everyone should follow written down value. So as far as P&L account is concerned, depreciation given or depreciation debited. Listen carefully, depreciation debited. That is nothing but as per Companies Act. So what should do? What you are going to do? Depreciation debited in P&L first disallowed. Initially disallowed. Why, sir? Because depreciation as per Companies Act you have to disallow. So we are going to prepare business income. We are compute business income for income tax purpose. For income income tax purpose. Thereby, income depreciation as per Companies Act, you have to disallow. So first you have to add, then find depreciation as per income tax. If it is given, see most of the case problem itself is given. In adjustment it is given depreciation as per income tax. Okay, it means in P&L account debited, that is as per Companies Act. So as per Companies Act you have to disallow. As per income tax you have to deduct less. This is also less. Depreciation as per income tax. Then finally you are going to arrive income from business. See, if you see the format is very simple. If you see the format is very simple. The main thing is what are the disallowances? Very important. Okay, what are the disallowances? So I will discuss one by one. Okay, listen carefully. All provisions and reserves. If debited, that is few item of disallowances while computing business income. Just we are discussing only few items. Okay. So first one, all provisions and reserves if debited. For example, provision for bad debts, provision for income tax. So these are the provisions. If debited in P&L, you have to, what you are going to do? You have to disallow. So if you see any provisions or reserve, immediately you have to disallow. Okay. Second, income tax including advance tax. That is, if any tax paid in P&L account, debit side, income tax paid or advance tax paid. So all income tax, either income tax or advance tax, disallow. Okay. Next, notional items. Notional items debited in P&L account. What is notional item? Very simple. See, suppose instead of doing business, suppose I am the proprietor of this business. Suppose if I am not starting business, suppose I am not started a business. Okay. What happened? I am going elsewhere, going for any job. I am getting a salary. I am getting a monthly salary. So thereby I am started a business. Okay, I am the proprietor. I am withdraw salary. So as far as proprietor is concerned, if any proprietor withdraw salary will be disallowed. Withdraw interest on capital, disallowed. Withdraw any rent, notional rent. What is notional rent? For example, this building is on my own. This is my own building. Suppose if I am not started a business, I am not started any business. What happened? I am debtor the property. So for that I am getting rent. Okay, rent received from this property. So this is my income from house property. So suppose instead of debtor, I am started a business. Okay, I am started any say cloth business. Okay, for this building, there is no rental income. I am not receiving any rental income because I am used to my own purpose. I am used for my own business. So if I am charging any rent, notional rent, then notional rent also disallowed. So salary drawn by proprietor disallowed. Then interest charged by proprietor on his own capital also disallowed. Then all capital expenditure or capital loss should be disallowed. For example, purchase of car debited in P&L. Of course, you know very well. As an account student, you know very well. Purchase of car is nothing but capital expenditure. Okay, you need not debit it to P&L account. It is an asset. But in certain there is a mistake. Okay, there is a mistake. A capital expenditure debited in P&L. What are you going to do? So all capital expenditure or capital loss should be disallowed. Then charities and donations. So in P&L account, it is given donation given to Swachh Bharat. Donation given to Swachh Bharat, clear, that is Ganga. Okay. So donation given to Prime Minister Relief Fund, donation to coronavirus, all donations eliminated. That is disallowed. All charities and donations disallowed. All personal expenses of assessee, all personal expenses of proprietor. So if any personal expenses, drawings debited in P&L will be disallowed. Already we discussed. Next, fine or penalty. See, if there is any violation of law, if see as a business proprietor, okay, if GST is not filed due date or any income tax, any penalty imposed by government, that penalty you cannot claim as expense. Thereby, if any fine or penalty debited in P&L account will be disallowed. Then expenditure on CSR activity. See, CSR is nothing but corporate social activity. CSR, corporate social activities. Okay, sorry, corporate social responsibility. Corporate social responsibility, section 135 of Companies Act. Section 135 of Companies Act is very important. So each and every company has to do something to the society. They have to do as per section 135. So for the company incurring some expenses, okay, relating to corporate social responsibility, that expenditure you cannot claim as deduction. Repeat, that expenditure you cannot claim as deduction. So if any corporate social responsibility expenditure incurred, okay, that expenditure is debited in P&L, then disallowed. Then failure to deduct TDS. Failure to deduct TDS, tax related source, on payment made to a resident shall be disallowed to the extent of 30%. For example, see, I am the proprietor. I am paying salary to X. Okay, 1 lakh per month, for example, 1 lakh per month. So I have to deduct TDS as per section 192. As per section 192, I am paying salary to an individual. Okay, so I am liable to deduct TDS. Of course, all of a sudden you are asking, sir, as far as TDS concerned, individual debit is applicable. How it is possible individual? Say I am a tax audit concern. Listen, I am a tax audit. So my turnover is say 2 crores or more than 2 crores. Okay, if it is more than 1 crore, tax audit will come. Say my turnover is say 3 crores. So I automatically come under tax audit. So as far as individual concerned, TDS provision applicable. Individual TDS provision applicable, also individual, provided that individual turnover or individual covered under tax audit. Individual covered under tax audit. So I am paying X 1 lakh per month. So I have to deduct TDS. Okay, I am failure to deduct TDS. So I am in P&L account debit salary 12 lakhs. In P&L account debit salary 12 lakhs. What happened? 12 lakhs into 30% will be disallowed. 12 lakhs into 30%, that is 3,60,000 will be disallowed. Why, sir? Because I am failure to deduct TDS. Any payment to the resident without TDS, then such expenditure will be 30% will be disallowed. You cannot claim. So you have to claim only 70%. So what happens to the 30%? In which year you have deduct TDS and remitted to the government, then the balance 30% you can claim as deduction. Repeat. Say I am paying 12 lakhs salary. Out of 12 lakhs, 30% will be disallowed. That is 3,60,000. Okay. So when you are going to claim the 3,60,000, when you are remitted to the government, you have to deduct TDS and remit it to the government. In which year? Then on that year you can claim as deduction, balance 30%. Next, any payment exceeding rupees 10,000 by way of cash or bearer check. Okay, the limit is 35,000 in the case of payment to a transport operator plying trucks. That is, if any payment, okay, any payment, printing stationery or any expenditure, suppose I am paying cash in excess of 10,000, section 48.3, section 48.3. So in excess of 10,000, if I am debited to P&L, for example, advertisement. Say advertisement say 15,000 rupees paid in cash. So since it is exceeds 10,000, entire 15,000 will be disallowed. Entire 15,000 will be disallowed. 100% of the expenditure will be disallowed. So very strict, very simple. The object is all payments should be covered only by way of check. So if it is all payments through checks, then everything will be white. Okay. So you are booking expenses. That expense nothing but your income. Okay. So thereby, so as far as government is concerned, everything should be in digital. So every payment should be through digital payment. Okay, if you make digital, so there is chances of that is reducing your black money. Thereby, more tax will come for government. So object of the government is everything should be in the form of digital payment. Okay, so any expenditure in excess of rupees 10,000 or by way of cash or bearer check, even bearer check also disallowed. In case of transport operator, playing of trucks, instead of 10,000, up to 35,000 they are allowed. Okay, so I am paying some say 25,000 by cash for trucks. Okay, what do you call it? Playing and hiring goods through trucks. So till 35,000 will be allowed. Till 35,000 will be allowed as deduction. In excess of 35,000 only disallowed. Other than transporter, okay, the rest of the people only 10,000. Then any payment to a relative which is excessive or unreasonable to the assessing officer. Suppose, okay, I am appointing my son or my daughter as accountant. See, in general, for accountant, average salary will be 10,000 to 15,000 per month. Average salary will be 10,000 or 15,000 per month. But I am paying 25,000 per month to my daughter or my son. I am getting accounts assistant. So that excess, unreasonable, how much excessive? 10,000 rupees. That 10,000 will be disallowed. See, if it is given in the sum itself, okay, payment made to relative 10,000, bracket 2,000 excessive, that 2,000 will be debited, 2,000 will be disallowed. You have to add back this 2,000. So these are the very few items of disallowances. There are many items there. Okay, so according to the situations. Okay, next a few items of allowances. Repair, fire insurance premium, bad debts, advertisement expenditure other than political party, because if any expenditure incurred on political party will be in case of individual 80GGC, you can claim deduction and section already we saw 80GGC. In case of Indian company, corporate company, 80GGB, 100% of expenditure you can claim as deduction. Printing, postage, stationery, interest on capital for the purpose of business, audit fees, loss of stock in trade, employees' contribution to recognized provident fund, contribution to research institutions, any tax payable to the government. Listen carefully, any tax payable to the government, example GST, custom duty, municipal tax, bonus or gratuity to employees, interest on loan borrowed from banks shall be allowed only on payment basis. Very important, shall be allowed on payment basis. Section 43B. Certain payments allowed only on payment basis. Section 43B. Payment should be made before due date of filing return of income. That is, in P&L account, listen, in profit and loss account, 2 bonus, 2 GST. Okay, these payments are allowable only on payment basis. They are not paid. They are just claiming bonus to employee. It's payable. This is payable. Okay, so these two items will be allowed provided these two payments are made before due date of filing return. For example, my due date is 31/7/2020. Okay, as far as bonus is concerned, they are paid 30/7/2020. What about GST? GST they paid 14th August 2020. Thereby, as per section 43B, bonus you can claim as deduction. Reason, the expenses allowed only on payment basis. That too before due date of filing return. So here, due date of filing return is 31/7/2020. But you are paid to bonus to employees 30/7/2020. That is before due date. As far as GST is concerned, GST liable, you are liable to pay GST. But the due date is 31st July. However, you paid only on 14th August. Thereby, for this year, this GST will be disallowed. This GST will be disallowed. Okay, whether it is possible to allow, sir, of course, if it is allowed only in the year of payment. Okay, suppose if you pay after the due date, then the GST you cannot claim right here. As far as 31/3/2020, 1920 is concerned, GST will be disallowed. In 2020-21, you can claim as deduction. You can claim as deduction. Understand? See, as far as 1920 is concerned, previous year 1920, assessment year 2021 is concerned, bonus allowed as deduction. But as far as GST is concerned, you have to disallow because payment is not made before due date. Then next year, 2021, previous year, assessment year 2021-22, this GST you can claim as deduction next year because you paid on 14th August, which is belongs to 2020-21, assessment year 21-22. Okay, any doubt? Apart from this, general deductions. Section 37. An expenditure shall be allowed under section 37 provided it is not in the nature of expenditure described under section 30 to 36. If any expenditure which is not described under 30 and 36, then you can claim as deduction. It is not in the nature of capital expenditure. Okay. It is not personal expenditure of the assessee. It is not personal expenditure of the assessee. It should have been spent wholly and exclusively for the purpose of business or profession. Then it should not be incurred for any purpose which is offense is prohibited by any law. Then it is not an expenditure incurred by the assessee on CSR activities, corporate social responsibility. So if you satisfy all the condition, then that particular expenditure you can claim as deduction under section 37. Next, depreciation on tangible assets and intangible assets. See, as far as depreciation is concerned, you have to claim only as per income tax. So, in your P&L account, there is no depreciation. In adjustment, there is also depreciation. In P&L account, as per Companies Act. So, initially you have to disallow the Companies Act. In adjustment, depreciation as per income tax given. So, you have to deduct. You have to reduce depreciation as per income tax. The only interesting point is, suppose if asset is purchased and put to use, if it is less than 180 days, then 50% of normal depreciation you can claim. For example, if you purchase machinery 2 lakhs, say 15% depreciation, 2 lakhs into 15%, 30,000 you can claim as per income tax. However, if you put and use less than 180 days, you cannot claim 30,000. So 30,000 into 50%, 15,000 you can claim as deduction because if you any asset put to use less than 180 days, then you can claim only half of the depreciation, half of the normal depreciation. Suppose if it is used for more than 180 days, then it is not an issue. You can claim 100% of the depreciation, say 30,000. Okay, I will read. Asset acquired during the previous year and put to use for less than 180 days, 50% of the normal depreciation is allowed. Second point, asset acquired during the previous year and put to use for more than 180 days, full depreciation is allowed. Important, very important, where an asset is purchased by way of cash payment exceeding rupees 10,000, depreciation shall not be allowed as deduction. Listen carefully. See, if you purchase the capital expenditure, that is, if you purchase the asset by way of cash in excess of 10,000, then you cannot claim depreciation. Very important. Already we noted section 40A3. Any payment exceeding 10,000 by way of cash or direct check will be disallowed. Here also same. If you are purchase an asset through by cash, then you cannot claim depreciation. Next, in short, disallowances. Listen, disallowances, when you are going to add, if debited in P&L account. Suppose if you are not debited, for example, in adjustment given, provision for anything, provision for liability or anything which is not debited in P&L account, what you are going to do? Nothing. You simply no adjustment is required. Then less allowances. See, first we will see disallowances. Once again repeat. If disallowances debited in P&L account, then add. Suppose if not debited, it is given in adjustment. No adjustment is required. Then allowable expenses. As far as allowable expenses concerned, repeat. As far as allowable expenses concerned, if it is debited in P&L, for example, printing and stationery, stationary. What are you going to do? Nothing. No adjustment is required because already debited. In adjustment given, okay, salary of 30,000 omitted. Salary paid to X rupees 30,000 omitted in the books. Then you have to deduct. Less minus. Reason it is not debited in P&L account. You got my point? Read. Disallowances. If debited in P&L account, add. If not debited in P&L account, no adjustment required. Allowances. If debited in P&L account, no adjustment required. If not debited in P&L account, deduct or reduce or minus. Okay? Important. Business income is computed as per method of accounting followed by the assessee. Mercantile system or cash system. Under mercantile system, expenditure is allowed on due basis. However, certain expenses covered by section 43B shall be allowed on deduction only on payment basis, even though the assessee follow mercantile system of accounting. There are two systems, mercantile system and cash system. But as far as mercantile system is concerned, section 43B, certain payments covered by section 43B. We read GST, customs, municipal tax payable, any tax payable to the government that is covered under section 43B. Even though we follow mercantile system, but as far as section 43B is concerned, certain payments you made only by way of payment basis. If you pay, you can claim. If you are not paid, you cannot claim. Okay? Any doubt? So this is introduction, basics. Now we are going to discuss one by one. Small problem, whether allowed or not allowed. We will discuss whether allowed or not allowed. Fine. The following items are debited in P&L account of an assessee for the year ended 31/3/2020. State whether these items are admissible or inadmissible. That is, allowed or disallowed while computing business income. Whether you are allowed or disallowed the following expenses. Okay, one by one. First, single payment for an expenditure exceeding rupees 10,000, okay, in cash or balance check. First point one, single payment for an expenditure exceeding rupees 10,000. What do you do? Allowed or disallowed? Yes. What, allowed or disallowed? Disallowed. Very good. Why? Section 48(3). Very good. See, as far as section 48(3) is concerned, any payment exceeding 10,000 by way of cash or balance check will be disallowed. So in this case, disallowed. Very good. Next, payment of rent exceeding the limit, okay, without TDS. Yes, without TDS. What you are going to do? So payment of rent, okay, exceed the limit without TDS. So any expenditure which is attracted TDS. So if you make any payment without TDS, then 30% of the amount will be disallowed. So in this case, 30% of the rent will be disallowed. Any doubt? Fine. Donation to Swachh Bharat and Clean Ganga Fund. See, Swachh Bharat and Clean Ganga Fund donations. See, even you are going to donation to the Prime Minister or Chief Minister, as the case may be. If it is donation, will be disallowed. Will be disallowed. Bonus payable to employees due on 31/3/2020 was not paid before due date of filing income tax return. So bonus to employees due on 31/3/2020, it is not paid. It's not paid before due date. Then you cannot claim as expenditure. Thereby you have to disallow. Very good. Disallow. Purchase of computer for office use through online payment. So through online payment, whether it is allowed, purchase of computer. Yes, allowed. Yes, disallowed. Why? Yes. Purchase of computer is nothing but capital expenditure. It is capital expenditure. Listen, the questions will see when they read the questions, be careful. Okay, your concentration is diverted because online payment, not cash. So you are focusing on payment. Main thing is purchase of computer. So purchase of computer is a capital expenditure. It's not revenue. Thereby disallowed. Very good. Income tax paid, of course, disallowed. Provision for bad and doubtful debts. Provision for gratuity. See, if you see In P&L account, if any debit to provision or to reserve, immediately you have to disallow. Once again repeat, if you see any provisions or reserves, if it is debited, immediately disallow. Then loss on sale of machinery. Say, do you remember? All capital expenditure and capital loss should be disallowed. So loss on sale of machinery is a capital loss, thereby disallowed. Expenses on corporate social responsibility activities. So this is covered under section 133 of Companies Act. So every company has to do something to the society. Okay, compulsory they have to contribute to the society. Okay, thereby that contribution or that expenditure you cannot claim as direction. Thereby, if any CSR activity debited in P&L account will be disallowed. Fine paid for violation of provision of any law. You are paying fine, okay, because of violation of any law. Then fine, already we discussed, fine or penalty will be disallowed. Household expenses. What about household expenses? So it's a personal expense in nature, thereby disallowed. Okay. Any doubt on this? Any doubt on this? Okay. We will discuss a few points. I will discuss only for adjustment we are going to discuss, not in detail. For example, advertisement related to a bill for which payment was made bearer check. Payment was made bearer check. Advertisement amount is 24,000. Advertisement amount is 25,000. What happened? Yes, disallowed. Why? Any payment in excess of 10,000, either cash or bearer check, both will be disallowed. Very good, very good. Next, depreciation allowable under section 32 of all assets, rupees 10,000. See, I am reading adjustment. I am reading the not entire problem. I am only focus on adjustment. So here depreciation as per section 32 is nothing but as per income tax. So already given depreciation 15,000 given in the P&L account. Okay, what to do? So first initially 15,000 you have to disallow. Then depreciation as per income tax section 32 10,000 you have to less. Next, general expenses include personal expenditure 10,000. General expenses include personal expenditure of 10,000. So you have to disallow general expenses to the extent of 10,000. Repeat, general expenses includes personal expenditure of 10,000. So you have to disallow not entire general expenses to the extent of 10,000. Good. Interest on bank loan was not paid till 31/7/2020. Okay, being the due date of filing return of income. See, interest to the bank, that is covered under section 43B. That is covered under section 43B. If you not paid before due date of filing return, then interest debited in P&L will be disallowed. How much they are debited? 16,000. So 16,000 rupees will be debited. That is disallowed. Will be disallowed. Bonus to employees was paid on 30/6/2020 and the due date of filing return is 31/7/2020. So bonus already debited in P&L account. Okay, that bonus paid 30/6/2020. However, our due date is 31/7. So before 31st July, they paid bonus. Thereby, it is 100% will be allowed as deduction. It is 100% will be allowed as deduction. Next, car was used for business purpose. Of course, fine. Fine. Commission to agent. Commission to agent 30,000 rupees. How much? 30,000 was paid without deduction of tax at source. Without deduction of tax at source. What is the procedure? Yes, any payment made to a resident without TDS will be disallowed. How much? 30% of 30,000. In this case, 30,000 commission to agent. Okay, in excess of 50,000 or 10,000, it will attract TDS. Thereby, 30,000 into 30%, 9,000 rupees will be disallowed. Okay, in credit side we discuss dividend from domestic company. What should do? It is other sources. Thereby, you have to less income considered separately. So you have to reduce. Income from house property, reduce. Agricultural income, reduce. Okay, that's all. Any doubt? So next we are going to take next part. This is part 1, just basic introduction. Part 2, we are going to discuss section 44AA, 44AB, tax audit, maintenance of books of accounts. Okay, 44AD, 44AE, ADA. Similarly, we are going to one by one. Okay, so part 2 I will upload as early as possible. Okay, bye now.